Hey traders, it's Ray from Trade90X, and today is Saturday the 20th when I do this early in the morning here on the East Coast. Hope everybody had a profitable week. And again, as I always say, I start these off. This is our Trade90X weekend breakdown and review, where we look at what we did during the week, and then we'll kind of look forward and see what's happening for next week. And we do this rinse and repeat. And again, this is part of our success. Routines are part of our success. Again, let me go to here. Again, when we look at our success plan every single day, it's about our routines. Again, we do our pre-market. We're doing that between 7 and 8 Eastern. This is where we build our plan. Live market is between 8 and 12. We do that because we feel it's the most, volume and momentum. And again, this is where we execute our plan. We do not trade into news or key earnings. So let's highlight that. Make sure. Post-market is when we're done trading, we journal and review, continue to backtest. Okay, I'm going to highlight these. This is where also you ask questions if you do not understand anything. Okay, so again, every routine, whether it's the pre-market, post-market, weekend, weekly, monthlies. And again, we also do our weekly, monthly, yearly. This is where we continue to review and backtest, and ask questions, okay, if you don't understand something. And again, when we come in, again, our goal every day, every weekend is to help you guys prepare so we can be in a position to make money. Now, we use what's called the Earn the Right to Trade Live strategy, and this can be used for whether you're position, swing, day, or scalp trading, whatever fits your personality. Because again, we have something that I call what type of trader I am. And again, when you're part of the Trade90X community, and I bring this up because I want you to understand everybody has their own different personality, time, and resources. And it's not a one size fits all, but there are certain things that are one size, meaning that there's certain information that you need to know, every day, every weekend, every month, every year before you even consider stepping into the markets. And the things that we break down, again, we're going to review market context. Is the market, listen, market only can be bullish, bearish, or range. We're going to check the data and the charts. This is what we do every day, every weekend. Check the overall, market context, and we'll use the indices and the VIX. I want to understand what the main trend versus short-term trend. And again, we're going to use those indices and VIX. And again, when we talk about main trend, I'll say it, believe me, I'll mention it 5 or 10 times here. But again, I'll say it here. If the bullish trend is up, we want to get the short term in sync with the main trend to create the highest probability opportunity. If the main trend was bearish, then in the short term, I'm looking for pullbacks to short. And if the overall market context is in a range, then in the short term, I don't mind taking both sides. Okay, so this is something when you're part of the Trade90X, Earn the Right to Trade Live. This is why a key part of our strategy is the right information, back testing, sim, and understanding the logic. Okay, I'll write that in, understanding the logic so you can trade your strategy objectively. Okay, these are extremely, extremely important things that this is why I continue, like I said, I repeat this stuff because I want you guys, it has to become second nature, and I'm very passionate about it, and I want you guys to learn. But again, if you don't know the right information, you don't spend the time back testing and sim, and then understanding the logic so you can trade your strategy objectively, then I promise you, you're just not going to have success. So again, this is why I review this every morning. But the most important things every day, again, the rules of engagement, What is the market context? So let me put this in, rules of engagement, as I call it. Market context, the most important thing. Are we bullish, bearish, range, checking the data in the charts, checking the overall market with these symbols, the main trend versus short term, I just mentioned. Data, I'll look at things like news, market sentiment. We're going to look at the commitment of trader report, banks versus retail order flow. And then again, our routines, pre-market, live market, post-market, and then again, weekly, monthly, yearly. We're doing our weekly breakdown. And then, of course, you need to master your numbers. Again, I bring this up because I'm somebody who's been a business builder and a risk manager for over 20 to 25 years. And when I talk about Trade90X, I can only speak for us. So when I say this, the numbers are as follows. We don't risk more than 0.5% to 2% per trade. Okay, I prefer actually 1%. In a day, I prefer that you keep your risk to 3% per day. So per day. And then per week. And again, guys, I'm not doing this for my health. I'm doing this so you can understand, because if you don't know your numbers in business, first of all, you're not going to succeed. You're not going to be able to scale your business. And this is also about capital preservation. Okay, I see way too many people on social media saying, oh, just, watch a few videos, open an account, risk this. No, let's break this down. And the reason I bring this up so passionately, if you don't have your numbers in check, I'm just telling you right now, you might as well not trade live. You might as well just donate money to your favorite charity. And I'm joking, but I'm not joking. And I see way too many people risking 5, 10, 15, 20% and higher per trade. Well, let's just break it down. I don't care how good of a trader you are. Anybody can lose 5 to 10 trades. Okay? Anybody can go through a bad period. So let's just say 5 trades and you're risking let's just say you're risking 5, 10, 15, 20%. Well, if you lose those 5 trades and you're risking 5%, well, that's down 25%. If you're risking 10%, do the math, you're down 50%. You use 15, you're down 75. And if you're using 20%, you've blown up your account. So this is why I'm spending so much time on numbers. This is why I talk about it every single morning, every single weekend and month. And then the monthly risk, just take those no more than 60% risk. So again, this is what we like to do. Now I say 0.5 to 2%, but honestly, I prefer 0.5 to 1%, 3% daily risk. Again, this is of your account. Again, based on your account size. Okay. Now, when you're part of the Earn the Right to Trade Live event, we'll get more detailed into this based on, again, your time, personality, and resources, things like, what asset classes, what kind of risk, again, when you're part of that. But today in the reviews, I just skim over it. So again, the Earn the Right to Trade Live strategy, we come in every day. It's about the right information, back testing sim, understanding the logic of your strategy so you can trade your strategy objectively. Again, the rules of engagement every day. What is the market context? What is the direction? Okay, market context is direction. Now, you can only go up, down, or sideways. So our job is to identify, starting with the overall market. I use the indices and the VIX, and then again, that main trend versus short term. And I mentioned that. And then the data, we're going to go check it out right now. And then the power of the routines. And then again, mastering our numbers. We just talked about it. And then literally our setup process. Again, what asset class to trade, right here, what to trade. Here are the symbols that we're going to review every single day. These are the ones that we feel are most important. And again, these are the ones that we trade. We use futures, we use stocks, and we use options. And again, this will come down to what type of trader I am. When you're part of our community, we'll review that. But again, we like to use futures you know, in ETFs to break down the overall markets, when to trade, again, understanding the direction, where to enter in that direction, where to place stops, where to set targets, how to manage the trade regardless of what the market presents. And then again, always continuing to back test and ask questions, and then odds enhancers. And then listen, if you have any questions, hit us up at hello@trade90x.com, or take the time right now. If you go to our Trade90X Instagram page profile, you can book a 15-minute free call and ask us anything about trading. Remember, I can lead the horse to water, but I can't make you drink it. And so it's up to you now to take advantage, ask questions, send charts, book a 15-minute free call, and then make sure you continue to check out our Trade90X Twitter pages, YouTube, and also, you know, IG and Facebook, where we post tons of free information. And also, when you're part of the email list, you're going to receive updates on all these routines. All right, so again, guys, this is basically our trade plan when we come in every day, every week. So if you have questions, hit us up. All right, now let's go find out and see how we're going to, what the week brought, and then what kind of plan we're going to have for the week. Now, remember, I come in every morning, and again, I post it. I send it to, if you're on the email list, if it's on Twitter, we post our pre-market, our post-markets. So it's always about, you know, accountability. Again, we want to be able to look at our analysis, and then in the post-market, we want to evaluate, you know, what our analysis was in the morning, you know, what we did well, what we need work on, you know, did we follow our plan, our numbers, all that kind of stuff. But all right, so let's go jump in. And so right now, I always want to start with the news. And again, news and earnings, we don't trade into it here at Trade90X. That's just us. Again, we let the news come out. And what our hope is with important news is that it moves price quickly to a potential A setup that we look to trade within a bullish, bearish, or even range price action. Are we clear? Cool. All right. So Monday, definitely, we've got Powell speaking. You got manufacturing. On Tuesday, you got core retail sales. Wednesday, you know, we've got news, but then Thursday you got unemployment. So that is definitely going to be a busy week. Plus, remember, it's summertime, and we also are in an election year. So we have to be on our toes and be flexible, you know, because there's definitely the opportunity to have personality changes with every little piece of news that comes out. All right. Next, but our job is, again, who has the control? Is it bullish, bearish, and range? And how do we find a high probability setup within our strategy? And that's all our goal is every day. I don't care if you're position, swing, day, or scalper. But if you don't understand the direction of the long term and the short term, and you don't understand your plan and what information, you're going to fail. This is why I go through, and that's why I repeat this stuff over and over. All right, so earnings. So again, when it comes to stocks, whether you trade stocks or not, now here at Trade90X, we trade the, you know, Mag 7, mostly the main stocks, you know, the Apples, Nvidias. But again, remember, we're a consumer-based society, so anything that is important to the consumer, I want to understand. So again, you got things like Verizon coming out. You know, Monday, not too bad, but then on Tuesday, there you go, right there. You got UPS, you've got Coca-Cola, you've got Tesla, you've got Visa. These are the type of, like I said, Capital One. These are the type of stocks that are definitely personality changers. And then, of course, you've got, you know, Wednesday, we got important news throughout the week. So just be on your toes. Definitely when we have those top 10 or 20 stocks, there's definitely going to be personality changes to the market. Whether you trade them or not, just be aware. All right. Next, Fear and Greed Index. This is basically a sentiment tool. It just shows us short term, and it's telling us in the short term, we have indecision. Okay, next, sportchart.com. And again, guys, I give you the $1 million stuff every day, every week, and I don't hold back. I give you our strategy, I give you our numbers, I give you the data, and I prepare you with the symbols. I show you exactly our strategy, what are the setups and what we're looking for. And then we go, you know, post-market, we then evaluate to see whether or not those trades we looked at came to fruition or it didn't happen. And remember, every day is different. There are some days you'll have 10 trades, some days you'll have 3 trades, some days you'll have 1, some days you'll have none. And you need to be able to recognize that. And that's the biggest problem I find with most traders. They feel like they have to push the button. No, you don't push button unless you have a statistical edge and you totally understand the risk that's involved with every trade. All right, so barchart.com, what I'm looking for here is using the moving averages that the most, everyone uses. The 200-day is the long term, is still bullish. And then remember, if the main trend is up, I'm looking to get in sync short term. And right now we're still bullish based on the moving averages. Okay. Next, FinViz. Again, here, what I'm looking at, again, this was the cash count. This tells us that we had a very bearish Friday, and you can see the heat map. So I love this tool. And then I also like their group tab because I want to know what the sectors are telling us. So again, guys, this is that who has the control again, main trend versus short-term trend. 1 year, half year, 3 months, that's going to be our main trend. Looking at our monthly, weekly, and daily, that's going to be our shorter term trend. 1 day doesn't make a trend. And remember, if the main trend is up, I want the short term to be in sync so I can be trading. Now, this is what I look at. If I'm going to swing or position trade, I want to see the short term and the long term in favor. Now, if I see that the short term has indecision like it does right now where it's red and green, then I'm going to be focused on just our day and scalping. I have no interest in swing trading or higher if I don't have clear skies between the main trend and short-term trend, okay? But with the main trend up, I am going to be favoring in my short-term trading, and I'll show you when we get to that, all right? The longer-term trades. All right, so tradingstore.com. Remember, this is, guys, I only show you the data I think is important. Now, this is important because the Commitment of Trade report only comes out Friday at 3:30 once a week. And what it's telling us is smart money. Smart money is your banks, institutions versus retail. The banks and institutions control 85% of the order flow. Okay, that's why I go and I look at, these are the symbols that make up the market. I look at the indices most importantly. I start with the S&P. And again, all I care about, I don't care what someone's telling you on CNBC or Bloomberg or again on YouTube. Guys, if you're part of the Trade90X community, I give you the facts, not the fiction, right here. Filter out the noise. This is telling you right here, the money that controls the market, the long-term bias is still long. And until I see a personality change in this S&P, all I can tell you is that I'm looking for pullbacks. That's going to be the majority of my trades, or looking for pullbacks to go long. Okay. And until I see a change, I recommend you do the same. Okay. So again, we still have a long-term bullish bias. And in the short term right now, we do have some indecision in the data, but we'll go to the charts. And also that's going to be our final decision, of course. All right, stockcharts.com. I show you guys this every morning, every weekend. And what I love it is because I can quickly show you the main trend versus short term of a click of a button. And again, these are the symbols. Not only do we trade these, but these are the ones that we feel make up that market context, bullish, bearish, or range. Now, remember, I don't care if it's a 1 minute or weekly chart. Bullish is lower left to upper right. Bearish is upper left to lower right. Ranges equal highs, equal lows. And remember, in bullish and bearish momentum, whether you're trading a 1 minute or monthly chart, we're looking for that clear momentum into pullback and pause. Those pullback and pauses is where we look for our new potential entries within a bullish bearish market. And if you can't figure it out, you have no business trading it. Now with ranges, it's a rule of thirds, equal highs, equal lows. We never trade the middle of a range. And if a range is part of your back-tested trade plan, then I'm looking for, like here in Apple, the bottom third, when it has multiple rejections, it's obvious, I'm looking to go long. Top third, if I have multiple rejections at the top, I'm looking to short. I never trade the middle, but I'm trading a range until it can break out back to bullish, bearish momentum. And that's how price works in the markets. It can either go bullish, bearish, or range, but it always goes momentum. If it's bullish, it always goes momentum into pullback or pause, back to bullishness until we get that again. And what I call it is bullish. When people say trend, I call it imbalances. So bullish trend is just a bullish imbalance. That means the buyers have control. bearish trend or bearish imbalances. Bearish is more, there's more sell trades. And when it's a range, buyers and sellers agree on price until price can break out, and ranges are called fair value. Okay, it's not complicated. You just need to know the right information and how to use it, and then you need to understand, okay, the logic of your strategy and how to trade objectively. And that only comes, unfortunately, it comes with some repetition and discipline. This is why I said we have to earn the right to trade live. All right, so now that we know that the long term, if you look at the indices, are still moving lower left to upper right, and then I'm also looking at the 10-year dollar, but really I look at that VIX. Now, if that VIX is moving up, okay, that's not good for bullish markets. If the VIX is moving down with clarity, that's good for bullish markets. And if it's sideways, it's telling us indecision. And remember, the VIX is your sentiment and volatility. Now, Apple's also moving lower left, upper right. All right, so now let's go look at the short term. All right, so right now we can see that the long term is up, but in the short term, if the main trend is up, what's going to be the highest probability? Highest probability is where can we look for a pullback within the short time frame to get get in sync with the long term is going to be our favorite. Okay, now we are seeing some weakness right now in these indices. Okay, now there is a time and place for counter trend trading. Okay, now here are my rules with counter trend trading. Number one, and I talk about this all the time, you have to be like myself, somebody who, number one, fully understands the logic of the strategy and knows how to trade it objectively. Two, I've taken the time to back test that I have a statistical edge using our strategy if I'm going to counter trend against the main trend. Okay, and number three, you're a successful, profitable trader with consistency. If those three things are not accomplished, then you have no business counter trend trading. Okay. Again, these rules are put in place to help you succeed. So if you're going to go against them, then it's not going to work out well. So again, main trend for short-term trend. Most of us, if you are not satisfied the rules for counter trend trading, then we're going to be looking for, again, pullbacks to get in sync with the long term until we see a personality change in that long-term trend. If you've completed the rules that I've talked about, then you've earned the right to potentially counter trend trade. And I'm going to show you how we do that with our tools, which I do every morning and every weekend. All right, so now that we understand the main trend versus short term, we looked at the data. I'm going to show you one other chart. So this is the same thing as the moving averages, which I showed you, but I put it into a chart, and I've got the S&P, NASDAQ, and Dow, got the US dollar, I've got the VIX, and then I've got the 200-day moving average, the 50 and the 20. Now your 50 and 20 are going to be your short term, your 200 is going to be your long term. And I also want to keep an eye on the VIX, where we're at. But here's the most important thing. If you don't have a setup in the chart, none of this matters. This is just odds enhancer stuff. Again, it's just to help me understand. So the long term right now, again, is hanging in there. We're hovering, and we've been doing this for quite a long time up at this top third. But if this 200 starts breaking down, then I'll start getting concerned. And if I see the charts start breaking down. All right. Now, when we use the short term, I'm just going to show you, this goes back 20 years. So this is not just some random stuff. So how I use it potentially is when you look here, when the 50-day moving, remember, this is every stock in the market. So when we get down into these areas, this is where I potentially look for, especially if we have the main trend bullish, this is where I potentially then get excited if I have a setup in my chart to potentially look at longs. Okay. Now, if we have a bearish market, then I'm excited when we get up here. Now, if I'm in a trade, let's just say I'm in right here, I'm in a short trade. Well, when we do get down here, I'm also going to be looking at potentially lightening up my profit, or, taking off profit, or take the whole trade off. Same thing here. If I'm bullish, I want to start paying attention. If we start getting up to these extremes, that's time maybe to take some profit. maybe, adjust my stop, leave a runner. So that's how else we can use it. But again, I'm just using it as an odds enhancer. And what we see right now is we see the indices, especially the S&P, NASDAQ, quite bullish. We have the Dow that just has been trying to break out of a range, but we can see that it might be failing. And then, of course, I look to see if that VIX, and we can see we're at the bottom. But if we start breaking out, just got to be aware that we could have more volatility and negativity entering the market. So these are the things that I look at every day as odds enhancers, because all I care about and all you should care about is, number one, again, who has control, bullish, bearish range, the main trend versus short term. And again, just looking at the information, doing this every day, every weekend, every month. And again, this is going to help you put the probability in your side. So now that we understand all this, now let's go to the charts. And now let's figure out how we make money. All right, so top-down approach, weekly and monthly, I'm going to use as my main trend. And again, all I care about, no matter, again, it's the chart. You have to understand the main trend versus short term, but you also have to understand the chart that you're trading. Okay, so if I'm somebody who trades a weekly, monthly chart, I have to ask the following questions. Are we bullish? And remember, bullish is lower left to upper right. There we go. Bearish, upper left to lower right. Okay. And ranges are equal highs, equal lows. Again, I don't want to trade the middle. I like to wait. For me personally, again, I like to either look for the break and retest, or again, I like to fade. Again, if the trend is up, I like to, get below the range and take the trade. So these are things that you'll learn in the Earn the Right to Trade Live. But right now, all you should be caring about when you come in every day, every weekend, is asking the question, in this main trend, are we bullish, bearish, or range? Well, we're moving lower left to upper right. Okay, so we are bullish right now in the main trend. Now, what I've done to help, there's some odds enhancers that I use to help you guys for newer traders. This is just a basic off-the-shelf Keltner ATR 10 ATR, and this is your basic 200 EMA long-term. Again, what I want to see is, what's the slope? Is the short-term sloping up? The more slope, the more momentum. And is it sloping up above the 200 that's sloping up? And if we have that, then we know we're really bullish. If they're flat sideways, we know we have a range. If it's bearish, okay, then what we're looking for is we're looking for that upper left to lower right, and we're looking for the short-term band sloping down, and we'd love to see the longer term above. Like you can see right here, we had the slope down, but you notice the 200 wasn't above it. So this gave you a sign. Until we broke the 200, this was just a pullback within the main trend. Okay, and these are things, tactics that you'll learn when you're part of the Earn the Right to Trade Live. But again, I'm trying to educate you on the fastest way to determine main trend versus short term and who has control, because that's all I care about. All right, so now that we have that main trend up, now for the intermediary short-term trend, I'll use a 5-minute to a daily chart. So again, then it comes down to, all right, if the main trend is long, okay, main trend is long, then where can I find a pullback to go long? Okay. And again, I won't even consider counter trend trading unless we've got lower highs, lower lows. Right now, we have a pullback. We don't know. We don't have enough information. So right now, we're moving lower left, upper right. We have the short term above the long term. So for me, we're still bullish. Now, what you see on these right here, and again, I'm not going to get too deep into them, but these are what we call market profile. And the most important areas that I care about are these right here. So these are, I have a yearly profile, and these are just areas that I want to pay attention that can be used for real support and resistance. This is where the most order flow took place that year. So these are potential areas, and I like to look at those yearly, monthly and daily profiles to help with support and resistance. So right here. There we go. And so we're now into one right now. And if we break, and again, these are not, guys, nothing is holy grail. These are just based on the reason I'm interested in these, because they're based on real order flow and volume. That's the only reason I'm interested in these. So right now on the daily, for me, we just have a pullback, but we have no setups right now. All right. So the main trend is up. Short term is still bullish, but now we have a pullback. So where we can take advantage again of that counter trend trading, but remember the rules. Number one, you have to be like myself, somebody who's mastered the earn the right to trade live process, fully understands the logic and reasoning behind the strategy, and I can trade it objectively. Why? Because I've taken the time also to prove in the back testing, again, trading with trend and counter trend trading. And I've been a profitable trader for a long enough period of time. And again, if you do not fit that criteria, then do not counter trend. Okay. So now main trend is up. Short term, we're still bullish overall, but we're having a short term pullback. So anywhere from a 5-minute to 30-minute is where I can take advantage of that. And I'm going to show you how I do. This is how we set up our trades every morning and night. So reason I go through this stuff, guys, I could probably cut this down, but again, I take the time because I want you to understand, number one, all the data that we use just to look underneath the hood to understand who has the control. Then we go to the chart. I want to know what the main trend is. I want to see what the short-term trend is doing. Okay. And then what I'm going to do is, because we here at Trade90X, we scalp, we day trade, we swing, and we're also longer term traders for retirement. This is why I go through that. But I will tell you this, I don't care what type of trader you are, you need to understand this whole process and do this top-down approach. All right. So now we've created what's called the Trade90X within it. And it came from you guys. You guys asked to simplify it. So I do both, but again, I'm going to simplify it now. You guys asked us to create the Earn the Right to Trade Live with a one chart strategy. And so I did it. So every day we come in, this strategy is a 3-step process, which I'm going to go through the steps. This is how we break down, and this is how we prepare every morning, every weekend, to not only review our trades, but to set up our trades in advance, not after the fact, before. Now, in this process, I use a set of tools. These tools are off the shelf, predictive. Every charting platform has it. What I'd like to do is actually take them all and create a Trade90X, so I don't have to, because I have to do all this. So if somebody knows how to program TradingView, hit me up at hello@trade90x.com. I'd like to take all this and create it into one. All right, so the tools we use, you see this dotted line? This is the week, and then it gives us the days of the week. I have the yearly high-low right here in gray. I have the monthly high-low in purple. I have the weekly high-low, the weekly high-low in purple, monthly high-low in orange, the yearly high-low in gray, and then we have that short-term. We have the previous day's range, high-low. I have the midpoint, and I have the open right here, because we use futures to do our breakdown and analysis. And also, this is our previous day's close right here. Okay, next. So anything above the previous day's range. So let me just show you this. I'm going to go to a 5 minutes. So I can show you a little more structure. So the tools, the beautiful thing about these tools, number one, they're predictive. They're not lagging. They can use entry, stop, and targets, and they quickly tell us, number one, in the short term, are we bullish, bearish, or range? Why is this important? Because if you don't understand, if you're looking for a bullish, bearish, range setup, then you're going to be behind the 8 ball. This puts us ahead of 99% of the traders, because number one, it helps us relax. It helps us stay paused, and we know what we're looking for. All right, so here are the setups that we look for, and then I'll show you the entire strategy. So here's your previous day's range. If we're making higher highs, higher lows like this, that tells us in the short term we're bullish, and we're looking for bullish momentum trades. If we're below the previous day's range, and again, I need it to be obvious. If I can't figure it out, you shouldn't be trading it. If we're not making clear lower highs and lower lows, then we're not bearish. Okay, we're bearish. Now, anything inside the range right here tells us it's a neutral bias day. That means buyers and sellers, it's fair value. And what I'm looking for is, remember, when I talk about ranges, rule of thirds, bottom, middle, top. I have no interest in trading the middle of a range, and I have no interest in trading chop. Sideways chop, all it's going to do is literally just lose us money. All right, we need movement. So what I'm looking for when price is in the range is the following. Top third, strong momentum rejection down to the middle or bottom. Strong momentum to bottom third to the middle or top. Fake out, breakout to the middle or bottom. Fake out, breakout to the middle or top until price can get back to bullish or bearish momentum. Now, if we break above the previous day's range, I am looking at the weekly, monthly, yearly levels as absolute targets. Okay. And if we have, so right here, like if we have a weekly, monthly, yearly close to the previous day's high low, what I will do is I'll kind of turn it into a zone. Okay. So now you understand the tools. Okay, you understand the setups. I've given you our numbers. Now let's go to the three-step process and break down all the symbols we trade, and then we can see what happened this week, and then we can see what we're looking for going into Monday. And then, of course, I start every morning and we break it down again. All right, so step number one in the Earn the Right to Trade Live one chart strategy is the follows. Okay, so number one, are we bullish, bearish, or range in the main trend? Well, we're moving lower left to upper right. If you're not understanding that, hit us up at hello@trade90x.com, and it means you need more work. Next, what I look for is where was the last area, and I color code these in red. It only comes from the monthly and weekly charts. I look clearly where there's red and green candle pauses, and where has price paused and taken off. Okay, so here and here right now. So these are what we call decision points. They're very important, and I don't trade into them. I want to see how price reacts. Next, step number two, we start breaking down now in the short term, and you'll see we've got our decision points in, we've got our previous day's range, weekly, monthly, and yearly high lows. Okay, now what I care about is the week. I'm going to take this off, but now I don't want to, I'm going to do a separate video on profile. I don't want to get people confused. All you need to understand is I like to look at the going back a week or two in the short term, and I want to see what each week brings. And we can see that we had consolidation Monday and Tuesday. We failed at the monthly and yearly. And again, it's no surprise. And now we're breaking down. But what I want to look at is I want to squeeze the chart up, and I want to see where price consolidated. So we price consolidated here and here. So this is going to be another area I look at. So this is where price consolidated, took off, price consolidated, took off. All right. So now I'm looking in the short term, and all I care about is what is price doing now over the last week and day to day. And we can see again, we consolidated, and then we broke down. We had inside days, Monday, Tuesday, and we had an outside bearish day right here. And then we had another bearish day, broke below, and then also we finished this week also below. So definitely closing the week bearish. All right, so once we understand again what's going on in the main trend versus short term, then we ask the questions, are we above or below or inside the range? And then I'll go down to a 5-minute. Now, remember, every day when we have news, we will not trade into the news. And what I like to do with news is, let's just example here, we're trading between here 8 and 12. Say there's news at 8:30, I'll put a vertical line just to make sure I understand there is news coming out. All right, so basically, when we look at Friday, let's just do that right here. So remember, we come in between 7 and 8. We build our plan pre-market. We trade between 8 and 12. We won't trade into news. And again, that 8 to 12 is our sweet spot just because we like the momentum and volume. So right here, this was our analysis. We talked about it. We talked about the overnight traders definitely had a bottom third rejection, kind of scalp trade, back to the middle. And remember, when you're at the bottom, our targets are 2 to 1, middle or top. If you're at the top of the range, middle or bottom or 2 to 1, whatever comes first. All right, so here we go. So this is what we saw Friday. Again, I don't trade the middle of a range. So ranges, again, I want aggressive rejection at the top third, bottom third, fake out breakouts, or we change trend. So again, ES was actually a counter trend trade. Why? Because the main trend was up, but the short term, and I've given you the rules on my counter trend trading. And if you fit, then this was definitely momentum into rejection with a short, but you knew that this was a main target on Friday. Okay, and that was hit. And again, what we did not get, and this is something, again, when you do a lot of your backtesting sim, you're going to realize, see, we did not get that continuation. What we got was, got the nice break and retest, but then we just went sideways. Okay, and that happens, that's trading. So now this is going to be our new, high-low coming into Sunday, Monday. So what am I going to be looking for? Again, we're going to run through this a lot quicker now. I'm sorry it took time, but I want you guys to get it. So now we know that remember, the main trend is up. So on your checklist, and I'm creating actually a new checklist that's going to go through this. So the questions, is the main trend up? Yes, it is. So what's going to be the highest probability in the short term based on, we have the previous day's high, midpoint low? Well, coming into Sunday, Monday, strong rejection, bottom to look to the middle or top. Strong fake out breakout. Looks like the sellers have it. Nope. Buyers come in back to the middle or top. Or we break above the previous day's range and we get that strong higher high, higher low momentum into pullback and pause. And those are going to be the three, my favorite trades going with the power of the market. Anything that looks like this is going to be counter trend because the main trend is up. And again, who has the right to even think about that is somebody, again, number one, who's mastered the understanding and logic to trade the strategy objectively, has been a profitable trader for a minimum of 3 to 6 months, and is taking the time to actually, in the backtesting process, prove that they've got a statistical edge when they counter trend trade. If not, you have no business trading it. So I just showed you the 3 most powerful trades looking for Sunday and Monday, and then we'll come in again Monday and just hash this out again. All right, NASDAQ, rinse and repeat. Guys, we're going to run through this now quicker. So step number one, are we bullish, bearish, or range? Are we moving lower left to upper right, upper left to lower right, or range? Well, we're moving lower left to upper right. Where is the area where price is broken out recently and rejected? Again, I look at the most obvious red and green candles, and then I want to see where price took off. And these are the 2 areas right here. Okay, so we're still on a trend. Main trend is up, but we're just in a strong pullback. All right, let's go to the step number 2, 30-minute. Let's go see what's going on. And if we squeeze the chart up, we can see, like the S&P, momentum into consolidation, lower left to upper right. And this is going to be, let's put this right here. This will be our new low. So we have decision points. We have our levels. All right, so what did price do this week? So we know, just like the S&P, it rejected that monthly and yearly. And again, that's why I talked about these levels are not just there for your health. They're there before you come in, and they're very powerful. All right, so again, what did the week do? Monday and Tuesday consolidated, and like the S&P, Wednesday, Thursday, and Friday gave you definitely counter trend bearish opportunities. And again, you understand the rules for counter trend trading. Let's go to step number 3, see more structure. And we can see coming in Friday, ask the questions. Remember, we're coming in at 8, between 7 and 8, doing our analysis. So again, was price above? Was it inside or below? When we came in, it was inside. Again, overnight traders had a nice rejection scalp back to the middle, and then it failed. And then again, it did the same thing as the S&P, but very tight range between that monthly, yearly, and here. There we go. Let's go down a little bit further. Let's go down to a smaller time frame. So if you do trade anywhere between a 1 and 5 minute, again, you had a trade right here. You had to break, retest, and then you had a key target right there. Now I will tell you, let's look at the trade. So not a good ratio at all, because I want to be above this up here, above a level. I want to do a structured stop above some key candles. So not really the greatest risk reward. And again, the nice thing about it, you do this beforehand. Again, if we don't have at least 2 to 1, I'm really not interested in the trade. I'm going to focus on the symbol that's going to give me the minimum of at least 2 to 1. So the NASDAQ for me, and again, I don't trade the middle of the ranges. That's just me. That's my trade. I'm going to focus on the symbol that gives me the most obvious, either bullish momentum, bearish momentum, top third, bottom third, or fake out breakouts. And those are the ones I'm going to trade. Now, again, that was a nice rejection right there in the middle. So if you're somebody that is back tested and proven that you want to trade the middle, that's going to be, again, that's going to be up to you. But me personally, that's not what I do. I look for the ones that, again, that I can really get those really good edge trades. And again, I have enough symbols where I find that I always get those trades. Like, here you go. There's the YM right there. I can just look at it. All right. So step number 1, YM Dow. I always start with the indices. All right, so look at what's happened here. Momentum, consolidation, momentum, consolidation. So the Dow looked like it was going to break out, but now it's failed. And we have consolidation. So what do we do with consolidation? Bottom, middle, top. I don't want to trade the middle. I'm always focused on ranges, bottom third, top third, fake out breakouts until price can break out. So right now, when we do have consolidation, if I'm somebody who traded a weekly chart, I'm going to be looking to fade the top third, bottom third, won't trade the middle until price can break out. And then in the shorter term, because we have consolidation, I don't mind trading both sides. All right, so we have this range right here. We know that we have a bigger range from the bigger time frame. We also know this is a monthly and weekly. All right, so what's happening inside that bigger range? We can see that we were bullish, and then like the other indices, we hit that monthly, weekly, yearly target and then failed. Now the Dow, unlike the S&P and NASDAQ, was bullish Monday and Tuesday, gave you some very nice setups. So let's go to the 5 minutes so we can see more structure. All right, so we can see, let's go through this whole week right here. Let's go look at Monday. All right, so Monday was an inside day and just a bunch of chop, really no setups Monday. And I'm going to do a 3-minute chart with some more structure here. Okay. Tuesday. Beautiful trade right here. Break and retest, went from a strong momentum, break and retest. Beautiful, beautiful trade. And this trade was the gift that kept us. Guys, this is what happens. Like I said, this trade gave you, almost 4.5 to 1. All right, Wednesday. Another good trade. Chop. We went from chop, inside day. No business trading these, to right here. Beautiful. And this trade only gave you 1.66, didn't get the follow through. Again, if you're a day or scalp trader, you're done at the end of the day, so you got your 1.66. You're flat at the end of the day. Remember, day and scalp traders were flat at the end of the day. If you were a swing trader, then we trade, days to weeks. All right, so then here was Thursday. Again, remember, we started having consolidation. So this is the overnight traders. And then this was a beautiful short. Now, remember what I talked about? If the main trend is showing consolidation, I don't mind taking both sides. We rejected the monthly, yearly, beautiful. We had momentum, break and retest, beautiful setup. And this trade literally gave you 5 to 1. So, guys, all you need is one good trade a day. There's going to be days where the trades suck, and then there's going to be days. And again, you have to be able to realize, like right here, I don't want to trade this shit, and either do you. But look at that right there. That was a nice setup right there. Beautiful. We had sideways consolidation. We broke below. Remember, in consolidation, in the main trend, I don't mind taking both sides. We had a bearish trade right here. Beautiful. The only thing about this trade that really doesn't work for me, I hate trading big candles, because then your risk reward is too great. So then you would have looked for the consolidation. All right, so that was the Dow. All right, so now this is going to be your new high low right here, coming into Sunday and Monday. All right, so with the Dow having a consolidation, I don't mind taking both sides. So I'll be looking for strong momentum off the bottom to look to again, if it stays in the range, fake out breakouts, rejection top third, fake out breakouts. Again, I want movement, and then I will play the range until price breaks below, lower highs, lower lows. Guys, this is what we look for every day. All right, let's go through the Russell, same thing. And then I'm going to go through some other stocks. Again, on the weekend, I take a little bit extra time. I know this is a long video, but again, I want to make sure you guys get it. And I also want to handle the symbols that you have. All right, so we can see right now that the Russell is kind of back in a range. It was in a range for 2+ years. And now we went from momentum into consolidation at the top of the range. We still broke out, but now getting a pretty big rejection right here. So let's go to the 30-minute. All right. So what's been going on over the week? Russell over the last week or two has been absolutely bullish. And now, like the other indices, towards the end of the week, it definitely fizzled out. Let's go to the 5-minute. All right, so what did it do on Friday? Friday was basically a non-existent day. It was a chop day, nothing to trade. Again, if you traded that, then you need to tell me why. This was just no trades right here. And again, on the Russell, this will be your new high-low. So I will say this, when we have very tight previous days ranges, when it's this tight, a lot of times I don't want to trade the range. If I want to trade a range, I want it to be wider because we have more profit potential. A lot of times what will happen is when you have a narrower range, we'll look to break out. So that's what I'll be looking for with the Russell. coming in on the short term. All right, let's go look at Bitcoin because we're getting a lot of play with that. Let me clear that off. Guys, it's rinse and repeat. I don't care what symbol, I don't care what asset class. The Trade90X earn the right to trade live process is the same. All right, so it's the same three-step process, looking at first the main trend. Now we can see, look left, always look left. We can see that price has broken above, but then went into consolidation. Okay, we're in consolidation. And we've been there for quite a while. All right, so what do we do with consolidation? Bottom, middle, top. I want nothing to do with the middle. In a range, I look to bottom third, top third, fake out breakouts at top third until price can break above or below. And that's exactly what we got. We got a fake out breakout at the bottom of the consolidation, and the bulls are moving back into the range. All right, let's go to the 30-minute for people who like to trade short term. And again, whenever we have these bigger ranges, I will kind of just do this just to outline the top and the bottom. What is price doing all week? It has been bullish and now kind of consolidating. Let's go look at the 5-minute. Now remember, Bitcoin is live because it trades 24 hours. So let's go look at Friday. So Friday was a beautiful trade. Look at that. Using our tools and our strategy. Again, overnight traders got trades as well. Bottom term rejections, we consolidated, and then we had momentum and break and retest. This was a beautiful trade. There you go. That trade gave you just about your 2-to-1. Beautiful if you were a short-term crypto trader. Now, this is what we're looking at live right now as we speak on Saturday. We're basically in inside day, bottom, middle, top. You've got a monthly, yearly on top of the previous day's range high, and we're in chop. So right now, what am I looking to do? If I'm trading someone who likes to trade Bitcoin, all the time, well, we're in a range. So what am I going to be looking for? We're in consolidation. I'm going to be looking for bottom third rejection to the middle or top. Fake out breakouts to the middle or top. Strong momentum rejection to short at the top third. Strong momentum, fake out breakout to short. And I'm going to play the range with the trades until price can show me that, or we can break below to trade below. Same thing. So guys, it's the same trades. It's just a matter, again, rules of engagement. Who has the control? Okay, who has the control? Is it bullish, bearish, or range? Going from the main trend down to the short-term trend, and then understanding the logic and strategy. Again, if the main trend is up, I want to use the tools in the shorter term to help me look for those long trades. If the main trend is bearish, I want to use the tools in the shorter term to help me find short-term trades. And if we're in consolidation in the main trend, I don't mind taking both sides. And then I've explained to you my counter trend logic and how you need, if you want to consider it. All right, gold. All right, so let's do gold weekly here. All right, guys, I'm running through all the symbols. So what is gold doing right now? Well, you had 4 years of consolidation, momentum back into consolidation. So definitely an edge to the bulls, but what do we do with consolidation? Bottom, middle, top. I want nothing to do with the middle. I fade the bottom third, top third, fake out breakouts until price can prove whether we can go back to bullish, bearish momentum. It's rinse and repeat. Let's go to the 30-minute. Again, we now have our decision points in. We have our tools. What's been going on over the last few weeks? It's been moving lower left, upper right. And we also, again, rejected that yearly, monthly, and decision point. No surprise. Here's a monthly. All right, let's go to the 5-minute. All right, because we have consolidation, what's the rules? Right, when the main trend is in consolidation, I don't mind taking both sides. Then we use the tools. Remember, the tools will help us quickly tell us, are we bullish, bearish, range or no edge, and here we go. We were bearish. We're not above, we're not inside, we're now below. We started inside, then broke below. Now remember, gold opens at 820. Now if you were an overnight trader, you got paid. You had multiple opportunities to trade this. So when we came in, unfortunately, as U.S. traders, there was nothing. We just had chop. And unfortunately, that happens sometimes. So if you're a U.S. trader, overnight traders got paid, U.S. traders got nothing. All right, so now here's going to be your new previous day's high and low. So what's the plan for gold? All right, so remember, we have consolidation, so I don't mind taking both sides. So I want to see break and retest. Let's go to the top. Fake out, breakout, get above here. To go back up. Strong momentum, top third rejection, back to the middle or bottom. Strong momentum, fake out, breakout, back to the middle or bottom until price can get above. Target down below. That's it. That's gold. All right, let me do oil, because a lot of people ask about oil, and then I'm going to go do the 4 top stocks. All right, guys, oil. See, now oil is just a lot of sideways chop. Definitely in an up channel right here. And definitely sideways range right there. So you got this channel, sideways range. Really not much to trade there. Let's go to the 30 minutes, see if there's anything shorter term. All right, so we can see that price has been in consolidation inside, these monthlies. So let's put in some red lines here for the monthlies. All right, so basically just back and forth. Let's go to the 5 minute. All right, so because we're in consolidation sideways, what do we do with consolidation? We can trade both sides. So there you go. Now remember, Wednesday is always oil report. So again, we don't trade into that. But again, Friday, that was a nice setup right there. Again, I don't care what symbol it is. First we break down the main trend. Okay, what is the main trend in that symbol? Well, right now it's in consolidation. Then we come down to the shorter term and we analyze based on the tools, what has price been doing over the last week? Well, we know it's been back and forth. And then using the previous day's range, well, it was an inside day. It was a bunch of chop in the overnight. And then we had a beautiful short right there. Get above these level and these recent candles. You had 2 levels and candles, and this trade gave you almost 2.5 to 1. Beautiful. It doesn't get any better than that. All right, let's go look at the key symbols. So Apple's always number 1 on the list. So let's go again. Again, guys, I don't care if you're trading penny stocks, futures, it doesn't matter to me. This Trade90X, earn the right to trade live, 1 chart view, 3-step process. All right, so you look at Apple, momentum into consolidation, breakout. Where was the area where price, red and green candles? Right here. Price broke out. Now we're rejecting. All right, so let's go. Now in stocks, I'll go step 2, 15 minute. All right, so we've got our decision points in right here. I'm gonna move that up a little bit. I'm also going to put one here because we got a monthly and yearly right there. And Apple basically has been trading inside this important range. And also we have a monthly here, so I'm going to put that as a level. All right, so Apple basically this week, after having this bullish run, had a strong gap down, bearishness. Let's go to all right, so during the week, short term, we definitely went from bullish to bearish again. If you've passed the criteria to counter trend trade, then Thursday gave you a beautiful trade. Friday, chop. Wednesday, chop. Here was Tuesday, beautiful inverse, rejection at the previous day's range low. There was your trade right there, beautiful, with a target hit back, first target at the middle, and then on Monday, chop. So again, guys, this is why I have the same 6 to 10 symbols. I never know which one's gonna be good, but right now, the only days that were good were Tuesday, you had a long trade going with the trend, and then Thursday, you had a counter trend trade short below the range. And the tools quickly help determine high probability setups. So we clear, cool. All right, let's go to NVIDIA. And guys, sorry for taking so long on this, but again, I want to make sure that you understand, again, the strategy, the logic, being able to trade with objectivity, the numbers, the data. All right, so NVIDIA, here was the last area where price broke, strong momentum into now consolidation. There was your consolidation. Let's go to step number 2. All right, so what's price been doing over the last, and you can see we have the yearly up here. It's been trading inside the monthly high lows for the last few weeks, just back and forth. All right, so again, remember, what do we do in consolidation in the main trend? Trade both sides. So let's go look and see. That was Friday, Thursday, Wednesday, right here. And okay, chop on Monday, chop on Tuesday. Here you had a short, again, because we were in consolidation. Beautiful short. We're below the previous day's range. Below the previous day's range. That's bearish. And here's your open. That was a beautiful trade right there. Get above this level in the candles. Target hit down below, 2.5 to 1. Beautiful. Thursday, beautiful trade. Remember, we're beautiful trade right there. We had a decision point monthly and a previous day's range low, multiple. And this trade gave you 3 to 1. And this trade was in the middle. I'm not interested. So for me, the only good trades were Wednesday and Thursday. The rest of the week on the video was crap. All right, Mara. Now, the reason I'm bringing up Mara, because Mara is a Bitcoin miner, and it's been really volatile. FYI, I do own shares of that, and I have been trading it because it's been getting a lot of volume and momentum. All right, so main trend. You can see we're in consolidation. All right, what do we do with consolidation? Bottom, middle, top. I want nothing to do with the middle. We want bottom, third, top, third, fake out breakouts until price can prove it can break out. Let's go to the 15-minute, 10-minute, doesn't matter. Let's put this at the yearly right here. All right, so what has price been doing over the last few weeks? Consolidating in between the new month. You got yearlies, and now using the tools, we can see strong bullish momentum, pullback. All right, so now we're in consolidation in the main trend. So what does that tell us? Who can answer me? That's right, we can take both sides. So this was Friday, Thursday, Wednesday, Tuesday. This was Monday. All right, so using the tools, previous day's range. There we go. Beautiful setup right there. Had the open. Let's get above that. Get below this level and these candles. And that trade gave you, oh, sorry, wrong one. This trade right here. Gave us at least 2. And then also you had this setup right here. There you go. So Monday was a nice day. Also, Tuesday was a nice day right here. Beautiful break and retest. Beautiful trade. So Monday and Tuesday were lively. All right, because we're in a range. Wednesday, beautiful. We rejected off the monthly and yearly to short. Stop has to go above here. Come on. And that trade gave you your 2-to-1. All right, beautiful. Look at Merriman. Really, look at that. Beautiful. Look at that. Strong momentum, break, retest finally right here. And then look at that trade right there, either here or here, bottom third. Again, when the open is very close to that other levels, turn it into a zone. We're below the most recent candles, 2 levels. And this trade gave you your 2-to-1. All right, so Mara was a beautiful trade. That's why I've been trading it. It's been lively. All right, let's go look at Amazon. All right, 3-step process, guys. Number 1, go to the weekly. All right, so what do we got here? So we can see that Amazon, again, look left, has broken the highs, but then literally is failing. This is where the last area where price with a high, we rejected right here. All right, so we got consolidation, and we're just back into consolidation right now. So this actually took place on Monday. So we're in consolidation for the most of the week. Let's go to the 15-minute chart. I'm going to put this by the weekly and this monthly right here. All right. Squeeze it up. So basically, we've just been in this range from this top third to bottom third, just going back and forth. And again, Amazon went from being bullish back into consolidation. So once it went back into consolidation, you definitely had the ability then to trade both sides. So let's go look at it. All right, so this was Monday, so definitely had a setup here. We broke below the narrow range, and we had a bearish trade. And unfortunately, this is trading sometimes, we did not get that follow through. Once we got that base and then started moving up, we were out of that trade. If you were trading Amazon, this was a beauty right here. Top third, get above these. We had 2 levels and the open. And unfortunately, this trade only gave you your 2-to-1. All right, beautiful. Another beautiful trade right here. You had this zone right here of the previous day's range low and the open, and there was your trade right there above the 2 levels. And this trade, unfortunately, only gave you 1.63, and that's trading. Sometimes it doesn't work out the way we want, and I don't trade the middle, but look at that beauty right there. Beautiful break and retest, bearish engulfing candle, get above these candles in the level, and that trade gave you your 2-to-1. And this trade right here rejected off this monthly yearly on the bottom third. The only thing I don't like is the big candle, but again, let's not cherry pick because that's a great area. And this trade, unfortunately, if you took it, did not give us the follow through. And guys, unfortunately, that's trading sometimes. We have no, beautiful momentum, and then we just went into chop, and that happens. Let me just check. I know people had asked about Microsoft and Tesla, so let me just do those, and then we'll end it and go back to enjoying the rest of our weekend. So guys, I hope you guys are getting value out of this. I would love, this is kind of a weekend breakdown and lesson, really showing you how we break down the data, how we break down the Earn the Right to Trade Live strategy from a top down and the one chart strategy. And again, it's a 3-step process. Again, Microsoft step number 1, we're looking at the main trend, lower left to upper right. Where are the areas next where price paused, red and green candles, and took off right here and here. And now we just rejected this area, and we're trying, so let's put, because this was consolidation. So are we going to go back into consolidation, or are we going to reject and go higher? I don't know yet. I couldn't tell you until next week. But again, my job is to break down what the charts tell us and then look for, do we have a probability trade? So looking left, squeeze this up a little bit. And again, I'm just putting these areas where price paused and took off. That's why I'm moving it up. All right, so we can see over the last 2 weeks that Microsoft literally has been, more bearish as it rejected. Let's go to the 3-minute. Now with Microsoft, we had more of a bull bias. We did have a rejection. So these were definitely counter trend trades for me based on the main trend. But again, if you fit that criteria, then this was a beauty right here. Top third rejection. Stop goes above these 2 levels. And we just about had 2 to 1 on a Monday. Tuesday rejected below. That was decent. Didn't get the follow through, but it was decent trade. This trade, no. Wednesday, no go. Definitely, again, not getting that follow through. And again, a lot of times, guys, this is what happens when you don't have the main trend necessarily going in your direction. This is why counter trend trading can be, not, the highest probability. This is why I said, if you're not somebody who's been profitable, you're not somebody who's back tested, not somebody who fully understands the strategy and the logic and how to trade objectively and profitably, then you have no business trading that. All right, I'm going to do one more because I had somebody ask for Tesla. Okay, so here we go, weekly. All right, so we can see there's been a lot of back and forth on Tesla. We had this reversal right here. So we had this sort of breakout from this area where price paused in this area, took off. And now we're hitting these last areas. Yeah, we're basically back here. So this was sideways consolidation right here. We're back in that sideways consolidation. So we do a consolidation, bottom, middle, top. And again, I don't want to trade the middle. I want to trade top third, bottom third, fake out breakouts at the top and bottom until price can break out. Let's go see if there's something in the short term. Not a great chart in the long term. Let's see if there was short term. Well, we can see we had this extremely bullish price action. And then we rejected this monthly, yearly again. And then Tesla was kind of sideways range right here. And let's just put in, because we've been in the sideways range. All right, so let's go look down to the 3-minute. And since Tesla's been kind of in a range, you can trade it as such. So again, Monday, Tuesday, Wednesday. So here, Monday, Tuesday, Wednesday, Thursday, Friday. So Monday gave you a bullish trade. Tuesday actually gave you a bullish trade right here. We had a fake out breakout, and then price went back into the range. We had a trade here actually top third rejection right there, and did a round trip down to the bottom. Monday, chop. And then actually Friday was actually a very nice setup since we're in consolidation. Look at that. You had the open and the previous day's range. You had targets below. You had this consolidation right here. Actually, this could be low because you have two levels here. So this trade almost gave you your 2-to-1. Just about. All right. So there was this. All right. So let's wrap this up. It's gone way longer than I had wanted, but again, it's really just I wanted to make sure we had this as not just a market breakdown, but a lesson, because I really wanted to go through, again, number one, looking at the data. Again, looking at the news. We don't trade into news, making sure we understand, again, what stocks are coming out and what the personality change. The fear and greed short term is showing us indecision. Based on the moving averages, though, definitely still bullish in the long term. Short term still showing more bullish momentum, but based on the sectors, definitely main trend up, and we're seeing a little bit more indecision with the sectors. Commitment or trade report, no doubt, long-term order flow, banks and institutions still but long bias. And again, also 1 year, again, looking at the indices, we're still moving lower left to upper right. VIX is starting to move up in the short term, so that does concern me a little bit. And then short term, as I said, we're starting to have some short-term pullbacks. But again, we don't know yet, are these just pullbacks or is it something bigger? We don't know yet. Okay, the VIX going up like right now, starting to concern me. And as I said, then we went through the charts, we went through the top-down analysis. Main trend is still bullish. Short term, looking at the daily, is definitely this is a strong momentum move, but again, until I start seeing this, we could very easily do that. So just got to be cautious on the daily right now. Definitely strong momentum. So if we're going to look at trades that are going against the main trend, then I'm going to use that anywhere from 5-minute to 30-minute chart. And again, we went through the 3-step process. Let me just go through it one more time. Again, I'll take this off. So again, this is the ES, our most important symbol. Again, we're moving lower left to upper right. Where was price? Where's the last area? Red and green candles where we paused and price took off here and here. And right now we're just rejecting hard. Second step, I go to the 30-minute or 15 or 60, whatever you like. I squeeze the chart up. This is the week. And again, I want to see what's going on between the last few weeks, and then using the tools, our previous day's range, weekly, monthly, yearly, and decision points. These help us really craft what's going on in the short term. And then the main trend, again, if the main trend is up, I am looking more for those I'm using the tools to look for long-term trades. If the main trend is bearish, I'm using the tools to look for those bearish trades. And if we are in consolidation in the main trend in a range, I can take both sides. And then I've given you my counter trend rules. So here was ES for the week. So breaking it down, go to the 5-minute so I can see more structure. And then breaking down the ES right here. Because we had more of a bullish bias, I was looking for bullishness, but because my rules allow me to, because I back tested it, profitability, we did have a nice short-term counter trend trade here. Okay, and then here on Tuesday, definitely middle, nothing for me right there. And then on Wednesday, definitely had another really nice counter trend trade, break and retest. And then again on Thursday, going against the main trend. And then on Friday, we had a setup, but didn't really give us any follow through. And again, what you have to do before you take any trade like this, we have this key level down below. And we can see that this trade did not even give us good ratios. So you had no business trading that on Friday. So again, there was really just counter trend trading on the S&P short term this week. And again, you know the rules. So guys, and then for coming into Sunday and Monday, this will be our new previous day's range high. So again, the plan for me, bottom third rejection, strong fake out breakout rejections, move above the previous day's range high. That is going to give us our best setups for yes, going with the main trend. Everything else is counter trend. So guys, I know this was a long lesson, but again, I wanted to share, again, not just going through the strategy, but going through the symbols, really breaking it down slow. So if there's any questions that you have, then hit us up at hello@trade90x.com. I want to make sure that you guys get this. Enjoy the rest of your weekend, and then I'll be back Monday morning and we'll do it all over again.